shift in stance, at least according to textual analysis. We saw a decline in the number of times that the president mentioned things like reform and economy, but there was a marked increase in the number of times that the president mentioned things like modernization, development, socialism with Chinese characteristics. So that to us suggests that China is going to pursue its goal to achieve a modern socialist economy by 2035. Remember that last year when they presented the 14th five-year plan and the vision for 2035, President Xi did outline that that would entail higher quality growth, but also doubling 2020 nominal per capita GDP before 2035. And according to our estimates, that still requires growth to average around 4.5% between 2021 and 2035, which is still a relatively elevated growth number. So given what we have seen during the pandemic, given downgrades to growth this year, there is a positive reading in the tone of President Xi's message yesterday, because they will have to prioritize growth. That growth will be of higher quality, but it will not fall off a cliff. So we are not looking at a scenario where they only prioritize policy over growth.
Carlos, two other points here. First of all, China reopening has been a key macro theme for asset markets this year. So what did we learn about the future of the zero COVID strategy? And secondly, we're also going to be getting Q3 activity data out tomorrow in China. What should we be looking out for, and will fewer lockdowns be reflected in that activity data in your view?
Right, so there are two parts to your question. In terms of what we learned about the future of dynamic zero COVID, I have to say that we learned very little in terms of specifics, but the president did mention that zero COVID was instrumental in saving lives in China, and that they would prioritize improving healthcare services going forward as a prerequisite for them opening up. So we maintain our view that we are not going to see rapid reopening after October. We might have to wait until a new generation of leaders is in place in March to make that transition very gradually. So we are looking at a very gradual reopening process from March onwards. So that's what we can infer from the meeting. Of course, in the run-up to this very important twice in a decade meeting, especially this time around with the many personnel changes, they've wrapped up zero COVID measures quite significantly. So that is going to exert downside pressure on September activity indicators. In particular, investors should watch out for worse than expected retail sales numbers. I think that's where the surprise is going to come. And that is likely going to translate into some downside risk to the Q3 forecast of 3.3%. That's currently the market consensus. We could see a little bit below that. And of course, as this is going to be a gradual transition, we are looking at 5% growth in 2023. But depending on how quickly they are able to pivot, we might see further downside risks on that number as well in 2023.